Hello everyone. In today's video we are going to discuss or explore one of the most widely used and the trusted momentum indicators in technical analysis, that is the relative strength index, or in short it is RSI. Whether you are trading forex, gold, indices, stocks or cryptocurrencies, understanding RSI can significantly improve the way you analyze the market momentum and to make the trading decisions. These two are very important things. However, there is a biggest misconception among the traders believing that if the RSI reading is above 70 level, automatically means sell, and if it is below 30 level, automatically means buy. But in reality, the professional traders, they use RSI in a far more sophisticated way. In this video, we are going to learn beyond the basics. We will learn what RSI is, how it works, how to interpret the results of RSI correctly, and how to identify the oversold and overbought conditions. Also to recognize the bullish divergence and bearish divergences. One more important thing is it helps to identify the potential trend reversals in the market. This is very important. These are all the contents we are going to cover in today's session. And I'm sure that at the end of this video, you will have the practical understanding of RSI and know how to use RSI to read the market momentum and improve the quality of your trading. Now let's begin with the topic, the origin of divergence. This technique is all about comparing the corresponding highs and lows of the price action in RSI indicator. Here I am using the chart of gold spot versus US dollar and the time frame is 2 hours. We can see the price action of the gold and the relative strength index indicator applied here. The blue color line, what you can see here, is the RSI line, which indicates the momentum of the price action. There are two important levels in the RSI indicator. One is 30, it is called the RSI lower band, and the RSI upper band, that is at the 70 level. If the RSI reading is above the 70 level, it indicates that there is a strong buying momentum and the asset class in the overbought conditions. Hence, there is a probability or a chance there could be a potential reversal from this particular point. Similarly, if the RSI reading is below this 30 level, it indicates there is a strong selling momentum and the asset class is in the oversold conditions. Hence, there could be a probability of potential reversal to the upside. Now, if we consider this particular move, we can see here the price is making lower lows. Because if I compare the low with the previous low, the price action is making lower lows. Let us compare these lows with the corresponding lows in the RSI indicator. Now here in the RSI indicator, it is making the higher lows. So price action is making the lower lows and the RSI is making the higher lows. So there is a divergence here. This situation is called the bullish reversal divergence, which basically means the price is about to reverse to the upside. So in this situation, we should always be looking for the long positions or an buying opportunity. Now, how to enter into the market? This is very important. Now, let us consider this particular move. Now, here I am marking the swing high. This is the swing high of this move and this is the swing low. And I am marking here. We can call this one as the swing low or this is the demand zone. Here we can see the bullish reversal pattern. This is a bullish harami. So because of this momentum, buying momentum, there is a shift in the market structure or the breakout structure. And always we should wait for the retracement to this particular level, that is the demand zone or the swing low level. And here we can see the price has retraced to this particular low here, this level. And also this is the pattern called 3 stars in the south, which is the bullish reversal pattern. So with this confirmation, we can enter the market here and we can keep the stop loss below this low, and we can capture this particular move with the risk to reward ratio of 1:3. This is the second type of divergence. It is called bearish reversal divergence. Let us consider this price action. So this price action is making or creating higher high, higher low, higher high, higher low, higher high, and higher low. If you look into this one, if you look into this RSI have reached above 70 level. So it is an indication that the asset has reached or in the overbought position. Now we should be very cautious. We should not enter the market blindly. We should wait for the confirmation. Now here we can wait for the confirmation. Here we can see, here we can observe the price is making higher high, because if I compare this high with the previous high, the price action is creating or generating higher high. And for the same corresponding highs on the RSI, it is making lower highs. So this type of situation, it is called bearish reversal divergence. Means the price is about to reverse to the downside. So when this situation occurs, we should be looking for the shorting opportunity or to sell the asset. Now, how to enter into the trade? This is very important. We will look into this. Here we can see there is a potential reversal candle here. We have the inverted hammer, which is the bearish reversal pattern. Now, if we consider this entire move, this is the swing low and this is the swing high of the move. This is the swing high. Always we should wait for the retracement and also a reversal pattern for the confirmation to enter into the market. Here we can see after this reversal pattern, inverted hammer, the movement, it has created a market shift in the structure of the market. Also there is a breakout structure. Then we have to wait for the retracement for this swing high level, or also we can call this one as the supply zone. So when the price retraced to this particular level, and also we should wait for the potential reversal pattern here. So here we have the potential reversal pattern so that we can short the asset here and we can keep the stop loss above the high. And to capture this particular move with the risk to reward ratio of 1:3, which is the very good profit. Continuation divergence. This is very important type of divergence. As the name indicates, the price tends to continue in the same direction rather than reverse. If we consider this price action, we can see here the price action creates a higher high, higher low, higher high, and higher low. Now, if you see the price action here, it is creating higher lows, because if I compare this low with the previous low, this is higher. So price action is generating higher lows. For the same corresponding lows, now if you compare on the RSI, it is generating lower lows. Now what this RSI indicates? This in the RSI, it indicates the momentum is declining. But because due to the strong buying momentum or for the buying pressure, the buyers absorb the selling pressure and the price continues to move in the same direction towards the upside. Next we have bearish continuation divergence. Here we can see the price action of the gold. It is declining. It is generating lower lows and lower highs, lower lows and lower highs. Now if you compare this high with the previous high, this is lower highs. It is generating lower highs. RSI, it is creating higher high. In the RSI, it indicates the momentum is gaining or rising, but because of the strong selling pressure, the sellers, they are absorbing the buying pressure, which tends to move the price in the same direction, that is towards downside. Momentum trend line. Momentum trend line is a trend line that is drawn on the momentum indicator. Now let us consider this price action here. We can see the price action that is generating higher high, higher low, higher high, higher low, higher high, and higher low. And for the same corresponding lows in the RSI, I have drawn the momentum line here. You can see the red color line here, which is respecting this low. Once the RSI breakout from this particular trend line, we can see the corresponding price action here, bearish engulfing pattern, which is valid. So we can short the market here and we can keep the stop loss above this high, and we can capture this downtrend with the proper risk to reward ratio of 1:3. So in this way, it helps us to identify the breakouts in the momentum trend line. Support and resistance. Just like a price has support and resistance, even RSI also develops its own support and resistance. Now, if you see this chart, I have drawn the support and resistance line for this price action. And for the same corresponding highs and lows of the price action in the RSI, I have drawn the support and resistance. Now, if you consider this price action, if you observe here, the price is rejected from this resistance zone or level. We can see the price is declining and price has reversed from this particular point. But if you see the raw price action, there is no support level or there is no technical reason why the price has reversed from this particular point. Now, if we observe the RSI line, we can see that RSI line has approached this previous support level here. That is the reason why the RSI has bounced back from this particular point. Hence, the price action or the price is also bounced back from this level. That's how the RSI helps us to identify the potential reversals or to identify the support and resistance levels. So far, we have learned to identify potential trend reversals in the market by using different types of divergences. We will now learn how you can make your analysis much stronger by adding MACD and money flow index along with RSI indicator. In this case study, I am using the chart of gold versus US dollar, and the time frame I am using is 2 hours. We can see the price action of the gold here, and on the right hand side we can see the price in terms of dollars. This is the first indicator I have applied, that is a relative strength index. Along with relative strength index, I am adding 2 more indicators. That is one is MACD, that is moving average convergence and divergence, and third one is money flow index. And in my previous video, I have explained detailed of all the 3 indicators, RSI, MACD and money flow index, what exactly it is, how it works, and how to interpret the results or the signals correctly. So the link of that video I'll give in the description, so kindly go through that. Now let us consider this price action, this particular moment. I'm considering this particular moment, and this is creating, this is the lower low, and this is lower high, and again this is lower low. We can see that the price action is creating lower lows. And for the same corresponding point here, if we see that in the RSI has reached the oversold conditions. So there could be a potential reversal from this particular point, but always we should wait for the confirmation. See here, in the price action, it is making lower low. But here in the RSI indicator, it is making higher lows. So there is a divergence in the market, which is called the bullish reversal divergence, which shows that, or it implies that there could be a potential reversal to the upside in the market. And for the same lows, Here we can see the same corresponding low. If we consider the MACD indicator, the MACD line is also making the slope or the rising. We can see this slope, this is rising towards upside. It shows that the momentum is gaining towards the upside. Now similarly, for the same corresponding low in the money flow index, we can see that money flow index indicator is also generating higher lows, which shows that the momentum is rising. The difference between RSI indicator and money flow index is nothing but RSI indicator is calculated based on the price, but money flow is calculated based on the price and volume. So whenever we have the confluence in all the three indicators, RSI, MACD and money flow index, of the same price action levels, it gives us much more confidence, and it makes our analysis very strong to enter into the position for the long side. Now, how to enter into the positions or how to enter into the trade, this is very important. Now let us consider this particular move, and here I'm marking this is the swing high of the move, and this is the swing low, this is the swing low. We can see the reversal pattern here. We can see this reversal pattern. This is called bullish reversal pattern. It is a bullish harami pattern. We can see that price action here, price action, because of this bullish momentum, there is a breakout structure or there is a market shift in the market structure. So in this particular case, we have to wait for the retracement to this level, that is for the demand zone or the swing low zone. We can see that price, it is retracing back to this particular level, and there is a potential reversal here. We can see that the bottoming tail bar, or also we have the reversal pattern called 3 stars in the south, and we can enter the market here and we can keep the stop loss below this low to capture this particular movement with the risk to reward ratio of 1:3. So this is how the combination of RSI plus MACD plus MFI, by using these three indicators, we can enter into the long positions with much more confidence. And I'm telling that along with these indicators, we can use volume profile also in the price action. This is the case study 2 or the example 2. I am explaining you for the short opportunity or how to identify the sell opportunities in the market. I'm using the chart of gold spot versus US dollar, and the time frame I'm using is 2 hours. And the indicators I'm using along with RSI indicator, I'm adding 2 more indicators, that is MACD, MACD, and the other is money flow index. We can consider this particular price action. We can see this price action. This price action is creating higher high and higher low. Higher high, higher low, higher high, higher low. This is higher high and this is higher low and this is higher high. And if you see here, this red color line, this is generating higher high. The price action is generating higher high. For the same corresponding points or the same corresponding high, if you see the RSI indicator, it is generating lower high. So there is a divergence in the market. This divergence is called as bearish reversal divergence. Now, for better results or to make our analysis more stronger, we are using 2 more indicators, that is MACD and money flow index. Now, if you see for the same points, if you see this MACD indicator, we can see that slope, this is also declining. It shows that there is the momentum is becoming weaker. Here also in the RSI indicator also, it is showing that this decline is showing that the momentum is losing its gain. Hence, there could be a potential reversal to the downside. Similarly, in the money flow index, this is also for the same corresponding points, it is making or it is creating lower lows, which shows that the momentum is declining, so that there could be a potential reversal to the downside. Now, how to enter into the market? This is very important. If you consider this particular move, this particular movement. This is the swing low of the market, and this is the swing high of the market. I'm marking here the swing high of the market. We can see this one, or we can call this area as supply zone. Here we can see there is a potential reversal pattern. Here we can see the candle pattern, that is inverted hammer. So because of this reversal pattern, there is a breakout structure, or there is a market shift in the market structure. We have to wait for the retracement to this particular level. So we can see that price, it has come down and again retraced back to this particular level. Now we can see there is a potential reversal here, so that we can enter into the market here. We can short the opportunity or short the market and keep the stop loss above this, and we can capture this particular moment with the risk to reward ratio of 1:3. This is how we can, by using a combination of relative strength index, MACD, and money flow index, we can identify the short opportunity. If you found this video useful, like the video, subscribe to the channel, and turn on the notification bell for the more practical trading education. If you have any queries, please do write it on the comments. I'll be replying you. Thank you for watching, and I'll see you in the next video.